Apple reported earnings this week and their stock actually went down. So what we're going to do today is go through Apple's latest quarterly earnings. We're going to be looking at some reasons why their stock possibly went down and look at my overall investment thesis on Apple. So if that's some content you'd be interested in listening to, I encourage you to watch the video. And if you like the content, give me a thumbs up and subscribe to the channel. So without further ado, let's go and dive right into the earnings report. So this is Apple's most recent consolidated statement of operations, or the income statement. Now, this is for this most recent quarter and that same quarter in the prior year, and this is for this most recent year and that same year in the prior year over here. So their income statement is divided by their net sales, cost of sales, operating expenses, and their operating or net income. And then we go down to the earnings per share over here. So let's start at the beginning. Net sales. So net sales in the prior year were about 71 billion. Now they actually declined this quarter in terms of their product sales to 67 billion. So that's a pretty sharp decline in sales. Now what made up for this decline in sales in their products was actually their services revenue. That got bumped up by about $3 billion. So their total net sales for this quarter was only down about $600 million. Now again, this was a decline in sales. And when we look at it on a year over year basis, this was actually $11 billion less in total sales. But where they really shined this quarter was their gross margin. And this was because of their increase in the services sector of their sales. So the services sector, and this is a very, very high gross margin portion of their business. So this is where you pay for cloud data, the Apple Cloud, they have services revenue through their devices. And again, very, very high margin because it's not like the hardware products where they have actual physical parts that need to be built and costs on those. So it is a very high margin business. So as we can see, the cost of sales in terms of the services went up slightly, but the revenue up here went up a lot higher, $3 billion, compared to the slight uptick of about $900 million in the cost of sales. Now, again, they did have less sales on the product side. So again, their cost of sales here was less. But as we go down to the gross margin, it was actually higher this quarter at 40 billion compared to the 38 billion in the prior year. And when we look at it for the last 12 months or year to date, it is slightly down here, again, representing that decline in the product sales. But again, it's only about $1.6 billion here. So not too bad, but again, sales did decline in this quarter. So that's something to note, and we'll be looking at that as to why that's a possible reason why their stock price went down. Now, the operating expenses, I thought these were pretty good. They demonstrated pretty good cost control. So selling, general, and admin, or SG&A expenses, 6.1 billion in this quarter compared to 6.4 billion. So they have cut back on selling, general, and administrative expenses. So that's good to see. They still are pouring a lot of money into research and development, so $7.3 billion compared to $6.7 billion in the prior year. And then when you look at year to date, they have almost basically $30 billion in research and development compared to $26 billion in the prior year. So when we look at those, again, we're going to be looking at that when we look at my investment thesis, but they're pouring a lot of money into R&D, and this is going to hone into one of my core factors for holding Apple. When we talk about that later, they're definitely up to something. So we're going to be looking at that in a bit as well. Now let's look at their operating income. So as we can see here, the operating income was about 26, almost $27 billion compared to the prior quarter of $25 billion. When you take account for taxes, roughly $23 billion in net income compared to $20 billion. So again, even with the decline in sales here for the quarter, it was a very efficient quarter in terms of earning net income because of that gross margin expansion. The gross margins actually went up from 44.5% from the prior quarter to about 45.2% to this quarter. So again, that doesn't seem like a lot, roughly 0.7% from the last quarter, but it is a lot when you're talking about billions and billions of dollars. And year to date here, we can see their net income did actually decline roughly $3 billion. So again, it was an efficient quarter, but they're still down year over year. And these are very, very tough comparables. So you need to keep that in mind as well. Apple is still a great company. They had some gross margin expansion. They were more efficient. But again, they are not immune to macroeconomic events. When people have less money, they do spend less on very high ticket items such as their Macs, wearables, and iPhones. Now let's go and look at that as well. So their net sales, they do report them by segments in terms of geographical segments and in terms of categories. So as you can see, iPhone sales here did decline about, you know, roughly $5 billion. And then over here, their iPhone sales from the last quarter actually did go up in that previous year, but the Mac sales were down huge, $4 billion here of a decrease. iPad was down another $1 billion, and the wearables were slightly down as well. Services here keeping them much in line with the previous quarter, and again allowing for that gross margin expansion. But the total sales, as we can see here, they did decline year over year of roughly $11 billion. So that's a large decline. And again, one of the main reasons for why I think the stock went down in terms of the share price, people looking at their net sales and their total sales, saying they are declining year over year. But again, very efficient when we look at the earnings per share, 1.47 at a basic and 1.29. And when you take into account the diluted factor, roughly the same, 1.46, so $1.46 EPS compared to 129 EPS in the prior year. So again, still up significantly. And when you look at it year over year, 6.13 of EPS compared to 6.11. So still great. They're basically buying back a lot of shares. And when you look at the share count year over year, they actually reduced the share count pretty significantly. That's about 3%. So they bought back about 3% of the total shares here and canceled them. So again, when they're generating these huge cash flows, they're just buying back shares, keeping the stock price up, and that's helping their stock price to stay at that elevated level. Again, very efficient. I like what they're doing. It's still great income statement here for the quarter, in my opinion, even with the decline in sales. Let's look at their balance sheet. All right, so the balance sheet is a snippet in time. If you're not familiar with it, it's at one point in time, so it's September 30th, 2023, compared to the last year, September 24th, 2022. When we look at their current assets and non-current assets, looking at their cash and cash equivalents, it's about $30 billion. Marketable securities, these are essentially securities they can cash in quickly, or liquid securities, so I consider them as cash as well. It's another 30 billion, bringing cash up to about 60 billion. They have a bunch more in marketable securities, another 100 billion here, so roughly $160 billion of cash. That is amazing. Again, Google and Microsoft, they're probably the closest here in terms of cash on hand that they can match. Google probably being the second here, but 160 billions of cash like that, that's a huge amount of cash here. Great cash balance here. We can see they have about $30 billion in AR, another 30 billion in other trade receivables, some inventories, and then some other current assets and PP&E as well. So when we look at their current liabilities, I want to look at their debt right away. We've got about $95 billion in long-term debt, another $10 billion in short-term debt, or that portion of that long-term debt that's current. So roughly $105 billion of debt. And like we saw, they have $160 billion of cash, so they are in a net cash position of roughly 50 to 55 billion. So very healthy balance sheet here, in my opinion. And the other payables, again, those can be akin to the other receivables, so those can be paid off, no problem here. So very healthy balance sheet here, in my opinion. Let's go and look at their statement of cash flows. So when you get your net income, you drop it down here, and then you adjust for any non-cash items such as depreciation and amortization, share-based compensation expense, and any other items. And then you adjust for changes in your balance sheet in terms of assets and liabilities. Now this gives them about $110 billion in the last year, so the last 12 months ended, or LTM, of $110 billion. So that's their operating cash flow. So that is crazy. That's $110 billion for the year. So that's a huge amount of cash. So great cash flow statement, or cash flow for the last 12 months here, in my opinion. Now investing activities, these eventually net to zero because they're purchasing securities for short term and long term. Again, these are just those cash and cash equivalents. And then they have some property, plant, and equipment here investing into their business, and it's not huge. When you're talking about $10 billion or $11 billion on $110 billion, that's not that big of an investment here, in my opinion. So financing activities, That's really where this cash flow goes to. So they have payments for dividends. Again, they pay about $15 billion of dividends, so not a huge dividend payer here. But what they do like to do is purchase that common stock like we saw. They bought about 3% last year of the float and canceled it. So that cost them about $77 to $78 billion. So a huge amount of their cash flow goes to buying back their stock and thereby help keeping the stock price up or floated up. Now, they did take on some debt, but they also paid out the debt here. So again, roughly, $6 billion they paid off in debt, and a little bit of commercial paper and other as well. So it brings their cash balance down here to about $30 billion, and that's not counting the marketable securities purchases that we saw before. So their total cash balance is roughly $160 billion. So that was their most recent income statement, balance sheet, and cash flow review, or their quarterly results. Now let's go and look at why possibly they actually got a negative stock reaction. And we did say it was mostly because of these sales, like the sales were declining, but I'm actually still very bullish on the stock, and I'm going to give you a couple of reasons why. So like I said, they're investing heavily into R&D. So that's about $30 billion for the year. Of that, 120 bill or $110 billion of cash flow, or on the net income side, that's $30 billion they could have added to net income, bolstering their net income, but they're deciding to invest a huge sum of money into R&D. I want to go and look at what their actual CFO said in terms of their R&D spend. So this is their earnings report that they released. You have some words from Tim Cook here, and then you have some words from Luca Maserati here, their CFO. So he literally states that they have drove their double-digit EPS or earnings per share growth, and they returned $25 billion to shareholders. But I like this line right here: while continuing to invest in our long-term growth plans. So we don't really know what those plans are. They're spending a boatload of money in R&D, and Apple's management, in my opinion, is some of the best management I've ever seen. They're not going to willy-nilly spend $30 billion a year and not have anything come to fruition. They are investing in some great long-term products or services that we are unaware of. Like they're planning for the long term here. I'm thinking 5, 10, 15, 20 years in terms of product bases and services. So we don't know what they're specifically spending that money on, but I'm trusting in management here because they haven't proven me wrong in the past, and I think they're up to something great. So that's why I think that this quarter was actually a decent quarter. It was more efficient. Yes, sales did decline, but they do go through cycles with their sales where people keep their phones for 3-4 years. Then they have a super cycle where everybody upgrades to the next phone, and then their sales just skyrocket. So again, I think that they're up to something great here, and it's still a good business in my opinion. Now, the other point I wanted to point out here as to why I'm so bullish is the services revenue. So Tim Cook, their CEO, spoke to their services revenue. They reached an all-time record in their services revenue. And one thing to keep in mind here is that they have now reached their ecosystem or their all-time high in specifics of having an active base installed. So the real secret to Apple's business is not selling an iPhone. It's getting you into their ecosystem where you then purchase a MacBook because it works so well with your iPhone. You purchase an Apple Watch because it works so well with your other Apple devices, and you get hooked into this ecosystem. And once you see how flawlessly these devices integrate in your ecosystem, you do not want to leave that ecosystem. It's very hard to get out of the ecosystem. Believe me, I've done it. I've left and then I came back. So I think it's a great part of their business. And again, when they get you into this ecosystem here, they state that you have unparalleled customer loyalty. And because you're in that ecosystem, that's when you subscribe to their services. You get Apple Cloud, you get iTunes, you get all these other things where you pay monthly subscriptions, Apple Fitness, and you just keep paying them, and they're just going to keep coming off your credit card, and you will not notice. And that is recurring revenue for Apple, like we saw. Now, another part of their services revenue, and again, this is kind of a gray area, but they get a lot of money from Google. So if you've been following Google, they're part of an antitrust case, but basically what Google does is they pay Apple billions and billions of dollars every year so they can be the default search engine on your iPhone. Now, this is just cash that goes straight to Apple without having relatively any cost. So this just hits their bottom line. It's super great in my opinion because they have this user base in this ecosystem or this monopoly basically on the smartphone. They can charge Google essentially whatever they want to be the default search engine, and Google will pay it because it's a cost of doing business. Google needs to pay that in order to get to us, the end user, as their audience. So again, the amount has always been a secret here. I'm just looking at this article, but basically at the time when they did subscribe to this deal, I'll call it a deal in hyphens, in 2014, there was basically at $1 billion, which represented about 34% of revenue. Now, going on this same context, in 2017, it's believed that this sum paid to Apple was at about $3 billion in 2018, $9 billion, 2020, $10 billion, and now it's estimated to be anywhere in the ballpark of roughly $18 to $20 billion per year. So that is great, great revenue for Apple. Again, they're not doing anything. They're not incurring any costs. Google's just paying them to be the default search engine. And again, when you can't really see a breakdown in the financial statements, it's included in this services revenue line for the year. So anywhere from 18 to $20 billion of that $85 billion of revenue actually comes from Google. So those were the reasons why I'm still bullish on Apple. I think it's still going to be a great long-term holding. But let's go and look at the company on Seeking Alpha. And again, if you like Seeking Alpha, you can subscribe to this service. I have a link in my channel, which you'll get a great offer. And just for your information, I do get compensated on as a referral fee. But if you do like the service, I think it's great. It helps you look at stocks and all their different valuations, metrics, and financials. So check that out if you like. But basically, their stock reacted negatively here is at 177, dipped all the way down to 173, and then it's slowly kind of recovered with the market on Friday, but still down. And as we can see here, again, it's pretty expensive. So this has been the argument against Apple. They didn't really grow revenue, but they're trading at a 27 forward price to earnings. So that's pretty expensive when you have other companies like Microsoft growing revenues, cloud revenues at like 25, 27%, and Google's still growing their top line revenues at 11, 12%, and Apple's actually having revenue decline, even though they're becoming more efficient. But the thing is with Apple, in my opinion, it's one of these companies that I just would like to have as a core holding because of what they've done in the past and what I think they can do in the future. Now, am I buying it at a 27 price to earnings? No, I'm not buying it here. If I could dip down between to a 22 or 23 price to earnings, then I'd consider adding more. That's roughly in the $150 range. So if it dipped down to the $150 range, I probably would buy some more. But in terms of other purchases, I won't be buying any recently. So that was my video on Apple. I hope you enjoyed the content, and if you did, give me a like and a thumbs up and subscribe to the channel. Hope you have a great day. Thanks. Bye. Please note I'm not a financial advisor by any means. This content is merely for entertainment purposes only. Please seek financial advice if you are investing. Investing is inherently risky and you may lose money, and I'm not liable for any investing losses or decisions you incur. Thank you. Have a great day. Bye.